First video I want to do here, folks. So let's get started. Today I want to talk to you about the one stock wealth building strategy. Guys, this is what I call stress-free wealth in the stock market, as stress-free as it can get. I've come to the conclusion that the majority of people out there, we all love to jump from shiny object to shiny object, when in reality, the stock market pays the best when you simplify down to the minute detail of building a strategy. And then once you have that down, you expand further from there. So today, what I want to talk to you about is the idea that I do believe, because I have seen it happen. When you start building a stock market business, you want 3 pillars, okay? And all those 3 pillars can be built around one stock in the trading, one stock in income, one stock in your long-term wealth in the beginning. So that's 3 separate stocks probably based upon your money, but it's only focusing on one. Whereas I have a basket of 15 stocks that I trade, including indexes. But if I were to start again today, I probably would only start with one. For a whole year, I would just trade and learn one stock. Specifically, depending on my money, probably an index like the QQQs or the SPY. And I know a lot of people are against this, and I can understand why, because truly you're not going to get as much out of your money if you focus on one stock. Focusing on one stock you're going to have less to trade, because the market's only going to give you so many options to trade with it in a month. And that stock is only going to trade so often, which is why it's important that the stock you choose is volatile as a trading stock. You want that stock to move $5 a week minimum. Let's just go and look at like stocks like Goldman Sachs or Sherman-Williams or Cat Tractor. Those are really good examples of stocks that trade high volume, Tesla, and you can get a lot of money out of a move. You want the stock to have good options that are priced well for your money and that move in tandem with the stock. You're never going to have a dollar for dollar option, the stock movement, but you want something that moves well when the stock moves. And that's really the criteria you're looking. And so, yes, I'm going to get more out of my money with trading 12 to 15 stocks than you are your one. But you're going to miss a lot of the stress that I had when I started only trading one. I would miss moves on one stock when I was looking at the wrong stock over here, or I would miss entire market moves because I was looking at a stock that was way off my radar over here instead of looking at a focused 15 of stocks. I implore you to realize that this right here works. Find a stock that moves. Focus on whatever money you have in your trading account, trading just that stock and just those options. And what I suggest is you get a trading Bible. Mine is right here. And what I do with this is I have a chapter for every one of my stocks. And so in the beginning, you're going to have one chapter, and you're going to learn through the year how that stock trades, through every month, through every earnings season, through every catalyst that you could trade it with. And you're going to learn how those options move too. And what you're going to find is that those options truly do move different in different times of the year. There's going to be times of the year where that stock, their options are not going to be priced well at all. There's going to be times where that option moves incredibly well. And then after that year, add in another stock. You want to have a list set aside where, okay, these stocks move. But I'm going to focus on trading one with real money. And then over here, I'm going to have this list of practice trades. You should be doing 100 practice trades to every one real trade you're doing anyway. That's what I do. That's what I was taught to do. And then maybe after a year, you can add in another stock. Eventually, after a few years, you're going to have a handful of stocks. And you're going to realize that after about a decade, you're going to have to recycle them all anyway, because the majority of stocks do not trade well after being out and moving in as trading stocks for a decade. So it's going to change. It's ever evolving, but that's what the trading account is. It's an evolving way to exponentially grow your money. And the next piece of this puzzle, okay, is one stock to buy and sell for income. And now I've talked about this many, many times, but income stocks are not necessarily trading stocks. Income stocks are stocks that match your money to buy 100 shares of said stock, because I create income from stocks through covered calls. You can also do other cash secured put situations, but I love covered calls. It's very simple. You can get approved for it, and you can create 3 to 5% a month on it. But instead of worrying about a whole bunch of stocks out there, find you one that matches your money, one that matches what you're willing to, what you're willing to stomach, as far as, because when you're buying a stock, you're putting a lot of money into it. So what you're willing to stomach as far as volatility is concerned, and one whose options, this is important, whose options, monthly options, price well enough for you to get the kind of profit you want. Okay. There's a company out there. I don't have any affiliation with it, right? Excuse me. I don't have any affiliation with it right now, but I do use it on a regular basis. It's called Born to Sell. And they're really good at helping you find a stock that matches your money, that matches what you're trying to get as a return. And they'll show you what option to buy and sell. So that takes care of that portion. And now what I do with this is these are in 2 separate accounts. Okay. Now the third account is where wealth is built. Your money's moving from the first account to the second and the third account on a constant rotating basis, trading that one stock for the year. And then you're sitting here saying, okay, I have this list of 12 well-chosen stocks. Where did that come from? My mentor. Where did my mentor get that from? Warren Buffett. Buffett says a list of more than 12 to 15 well-chosen stocks is for the lazy and the ignorant. I don't know you, but I don't think you're lazy. And you're certainly not ignorant now that you've watched educational content, right? You want a list of 12 stocks because you never know what stock is going to set up chart-wise. And I know somebody out there was asking me, do I do charting education? Okay. I am working on something, but right now I just suggest charting-wise, you learn from 2 different people that I can guide you to if you join my newsletter, because these people, one of them, I don't even know if he's alive anymore, but the other one is a very private individual who taught me how to do the stock market, and I can lend you the information that you need to get in touch with them and their family, because I don't really teach the stock market in that depth yet, because I'm too into this type of education. That being said, vault idea thought process. What I mean by vault is you look at wealthy people, they have big bank vaults, right? Vaults full of gold and money and silver and all that stuff. Wealth is built by building your own vault, your wealth account. 12 well-chosen stocks, and you're not sure which one's going to set up. And what I mean by set up is you're looking for something in the wealth leg that allows you to see a downturn, to see a pullback in the price, but then set up with the long-term upward trend of that stock and buy into an upward movement. You want stocks that are, I have a lot of deeper criteria, but this is a surface idea. You want stocks that are global. They do global business. They're optionable, okay? Meaning you can use the options to protect your downside when they tank, and they will. And then you want stocks that have the ability, okay, what I call a competitive advantage in their sector or their market. What that is stocks that fit with a growing global demand for the particular sector that they are in the top dog of. John Deere, an example. Tesla, an example. I would love for them to pay dividends, but that's not a necessity for all of them. But they need to be either in the top of the sector or in a position to where they're benefiting from the business wins of a top dog in the sector. And that sector needs to be a sector that you can just see by global positioning that it's going to grow with the population over the next 5 to 7 years. And this is not a wealth education seminar, so I can't go any deeper than that, but that's your 3 accounts. And you can see where those 3 accounts, each one of them, that one stock theory fits. Okay. Remember, if you stayed until the end, that here is my views and opinions. This is my disclaimer. You can read it. I need to put it up there for every video I do. This is just the reality of it. Consult your financial advisor before doing anything with your own money in the stock market. This is just education. This is not advice. That being said,